All right, guys, welcome to the Buff Show. Shelby and I are back. We both took a little bit of a leave, but today we're going to be talking about the 5 biggest mistakes when getting pre-approved for a loan. So this is targeted towards buyers. So Shelby, what's like the biggest first thing that pops into your mind?
Well, the first thing that pops into my mind that's kind of funny. A lot of these things actually are like mortgage humor because they're like, oh, it's crazy that people would do this. But I think if you don't know and you're going through something in your life, whether that's changing a job or, getting a new car or something like that, maybe you wouldn't think to talk to your lender. But I would just honestly, like anything, when you start the loan process, you just need anything that you do, you need to consult with your lender before you do it.
For sure.
Because people do change their jobs and they do open new credit cards and get new car loans and things, or they go open a furniture card at RC Willey because they have a new house to furnish. And it's all those types of things that everything just needs to be on pause until we're finished.
Sweet.
So, yeah.
I think that's a good first tip because that is the first thing you see for sure. And like walking through homes, that's always what I say, like RC Willey, don't go buy a fridge. Wait till you close and then you can go do it.
Exactly. I always refer to it like I'm now your mom. So anything that you need to ask for permission.
I love it. So we'll go ahead and start out with like over or underestimating your budget. This is kind of more on an agent side of things, I feel like. But there's like nothing worse than when you go to a house, people are so excited to see it and then it's out of their price range.
Right.
And you have to dial back and then maybe it's harder to fall in love with a home. Or you go see a home, they love it, they could be pre-approved, they could be a strong buyer, but they're not quite there yet. Right. And so an offer just doesn't look as good for them.
Right.
So like definitely getting that process done before you get too excited about going to see a home is huge.
For sure. Yep. And, we could deep dive into the difference between the two at a different time. But I think the biggest thing, you should not go shop for a home unless you talk to a lender. Yeah. It's because, you could have ideas of what you can afford and what your income is, but we could look at things completely different. And there's different guidelines that we have to abide by and documentation we have to obtain to prove that income. And so it's really important not only to get pre-qualified and talk to somebody and have an initial discussion, because that can open a lot of boxes right up front to see what you can and can't do, but the full underwriting process of your credit and income is really important. Because then after that spot, after that situation scenario that we go through, you're basically guaranteed a loan amount unless anything crazy happens with interest rates. But we even buffer that a little bit in case they were to increase. Yeah. So then you can shop with full certainty that you know what you can afford. But that's the whole thing too. People really just need to budget before they even shop. Because I can tell you what you can afford, but maybe that doesn't fit into your budget. So that's the number one thing that you need to do is sit down and figure that out. And then we can go over the rest. But
for sure, because you want your house to fit your lifestyle.
Exactly.
And you don't want to be house poor. So.
Yeah, that's never fun.
No.
Financial stress is something that we want to try to avoid. But we do understand, especially right now, that affordability is an issue and it's harder and people are strapped a little bit thinner. But we always keep in mind, you're probably going to get increases, your life changes, job changes, so hopefully things will work out for the better in the end.
Hopefully eventually interest rates come down again and you can refinance.
But then you have the house. So then you don't have to worry about, finding a house with the competition. So.
Yes, for sure. Sweet. I love it. So then next, we kind of already touched on this a little bit, but applying for any other type of loan, like RC Willey, cars, I don't know, like random things that people do, but just don't. Just wait.
Yeah. And it's hard too because, I had a situation one time where someone was going through a divorce and they were trying to purchase a house, but the ex was taking the car. She's like, I don't have a car to commute and I need to buy a car. So in that scenario, we can look at your debt to income ratio and see what we can fit in there. And I think it's important to talk to whoever you're getting a car loan through and say what that payment would be so we can insert it into your scenario and possibly see what that would do to you. Yeah. And so we do understand that things like that happen. We do. And it's not impossible. There's just a lot of documentation we have to get so it can hold up the process a little bit. Mm-hmm. So, and it can affect your credit and it can affect other things too that could put you right on the border of qualifying for a certain product. So it's just really good to be upfront and honest about your situation, everything you have to do. It's not impossible, but if you don't have the conversation, it can really mess with things.
Oh, for sure. The last thing you want is to find the home you love, get to the closing table, and not be able to buy your home because you bought a fridge.
Or pull up in a new Mercedes or something.
Yes. Yeah. So, yeah, big thing. Definitely talk to your lender. The next one we're going to touch on is not comparing your lenders, or shopping a lender is how it's referred to a lot.
Yes.
So, what do you
Yeah.
think?
I think it's important to interview different lenders, and a lot of people right now are really rate sensitive, which makes sense. Rates are hard, you
That's
know.
the media.
Yeah, it
That's
is. It's
everything
all
in the
interest
media.
rates, interest rates, interest rates. So they think that that is the best thing. But I think what's really important is, do you trust your lender? Do they get back to you at a timely manner? Do you feel taken care of? Do you feel supported in the process? It's your home and your transaction. It's like the biggest purchase you will ever make in your life until you buy a bigger home. And so I think that it's really important to just have someone for an advocate for you that you feel like you can trust. And sometimes maybe that comes with a little bit of a cost, but most times people will want your business and they will, help you out there. But I think that's the biggest thing is really you need to trust who you're working with. And sometimes the cheapest loans out there, you're going to get the cheapest service. And
Mhm.
sometimes that may come with other consequences, like not meeting deadlines. And you may have to pay more money because of that. So just comes with a bunch of different
You get what you pay
different
for
consequences.
sometimes.
You do, yes. But also we understand we want to take care of people too. We want to make sure that we're giving them the best deal possible too.
Well,
So
you're always super competitive every time I've worked with you. Like
yes, there's
interest
hardly
rates,
anything that
whatever.
we can't do, and a lot of lenders are like that. But sometimes it's a race to the bottom line, and
Yeah.
but that's how it is. But I do think one big thing too is a lot of people are confused about the fees and they are looking at the interest rate specific, but they're not paying attention to how much they're getting charged for that rate. And not only that, but also the lender fees. There's also lender fees associated with a
Mm.
loan too. So there's different categories, but they're in a loan estimate. There's a box with the lender fees and the points for the rate. Those are the ones you want to look at in the loan estimate. All the other fees are third-party fees from property taxes, from homeowners insurance. No matter where you go for your mortgage, those fees are going to follow you and they will not change. So when you're
Okay.
shopping, those are the things to look for. So lender fees and the rate fees.
Okay. Also known as is that the origination fee? Is that
Yep.
what they would call
Yes.
it?
So
Okay.
it could call origination fee. It could be a percentage. It could also be called a point.
Okay.
Usually a point in our lingo is the same as 1%. So 2 points is 2%.
Okay.
Yeah. And it goes off of the loan amount. So
This is good because this is something
yeah.
I didn't know when I bought my first house. So
Yes, but it's all good stuff. And I love to calculate the break even point because for 1/8% in an interest rate, like sometimes it's only $50 a month different, but you have to pay $1,000 to get that rate difference or
Yeah.
more depending on where the rates are that day. So I think it's really important to know like that could take you 4 years to make up that difference. So a lower
For
rate
sure.
may look appealing, but what are the chances of you refinancing in that 4 years?
Or
Then you got to
selling.
pay more fees for another appraisal and title fees and things like that again, or selling or moving.
Yeah.
Like what's the reality of you actually staying in that home for that long?
Yeah.
So just all good things to look at. Sometimes an eighth of a point or a quarter of a point higher in interest rate isn't the end of the world. So just good things to look at.
I love it. Okay, so then next we have don't change your job. This is a big one I think doesn't click in people's heads because they're like, "Well, I'm making more money with this other job." But what do you guys need as lenders
Yeah.
to show that that's a good thing
Yeah,
rather
in
than
the
not?
background, we have to look at verification of employment. We have to order things from that company, that HR, to get a year to date pay stub to show that the hours have matched the hourly and to see if there's been any leave for whatever reason or to see, bonus income or overtime income and how long that's been going so we can include all of it. So there's just so much that goes into proving employment that if you change jobs, we then have to not only go back to the other employment, but then also verify everything with a new employer too. So again, the same thing with the buying the car in that situation. We understand that maybe you have this opportunity and it just happened to happen when you were searching for a home. And we get that. But the rule of thumb is it usually has to be in the same line of work. And you can't go from being W-2 to self-employed because we need at least 2 years of self-employed to look at that. And you definitely don't want to go from being W-2 to like just straight commission or something like that, right? With like a
Yeah.
lower base because we can't prove any of that. So I think those are the biggest things to look for. But if it's just straight across, hey, I'm getting paid a little bit more, this company, same line of work, Really the thing we need is just a pay stub to hit your account and to show that before we can close. And we can
Okay.
move that actually pretty close up to the closing deadline, and we can condition it to closing, but we have to get that pay stub to make
Okay.
sure that you're actually getting paid for that new job.
That's good to know.
Yes. And we can't qualify off of future income either. So if you have a job offer and it's like way out in advance and you're like, well, I'm going to be getting paid $100 more an hour or something. Well, that's great, but we have to use your current income. So those are all things we have to look at too. But yeah, definitely conversations you need to have with your lender and ask good questions to make sure when that right move would be.
Okay, cool. And make sure when you're making that transfer, you don't hurt your previous employer's feelings, because
Yeah.
now your lender's got to work with them.
Yeah. Yeah, we still got to
So-
get stuff from them too.
Yeah. Okay, cool. So then number 5, the very last one, we have don't close any bank accounts and don't make any large deposits, which sounds crazy because you would think like, okay, if I close out this credit card, that'll help my credit possibly, or I don't know, making a large deposit. I have more money, but you guys have to track things. And so what does
we
that
do.
look like?
Paper trail for everything. We need a paper trail for everything. And I do, like when people have an account somewhere and, we have to show where the closing costs are coming from. So a big thing that we look at, if you close your account and move all your funds over to another account, we still have to get where that money came from. If it was in that 60 to 90 days, we still have to get a paper trail of your old bank and your new bank. So it's just a lot of work,
Yeah.
especially if you're doing it right in the middle of it. Again, nothing I would say is impossible. It just extends everything. It's more paperwork. But the other thing is too, sometimes things are hard to get. And if we get held up somewhere where we can't prove something as little as your bank account, that could make or break. It sounds crazy, but sometimes people are like, well, I just can't get it, or I don't have access to this or that, or,
Mhm.
so it can definitely be hard. The large deposits, what we generally look for is if it's more than your monthly income. So you're more than your monthly income in one deposit, we have to get that sourced. We have to know where that's coming from. Because some people have side jobs that they don't mention to us, but those also
Mhm.
come with losses. So then we have to account for those too. So it's just we look at those deposits and we find out. We can see where it's coming from. And if it's cash and you don't have any way to tell us how it came from, like if it was from a sale of a car and you can give us a bill of sale, great, we can prove that. But if it's just this one lump of cash and we're like, what you doing? And you can't prove it, then that raises a lot of red flags and can hold things up quite a bit. So those are just the biggest things. If you know that something's coming, or it's just good to have a conversation and say, how is this going to affect my loan while we're going through this process? Should I wait till we close to deal with this? So just all good things to look at.
I feel like a really common one you see is like family members trying to gift money to help them close on a home or whatever that looks like.
Sure.
So what
Yep,
do you
so
see
they
there?
get
Like
those-
brothers, siblings, I don't know,
Yeah.
parents.
And gift funds are great, and we have a process for that, but they have to sign a letter that says it's a gift, so they legally can't come after us and say you owe me money. And then we have to get actual like a transfer information, like a transaction from the gift family member, and then show the deposit into our borrower's account. So we still have to show a paper trail. So if they are, not willing or not wanting to do that, obviously there is a way that you could get around that. If you had the funds and then afterwards they could transfer you money, that's fine. Afterwards, we're not going to look at your bank accounts and be like, where'd this deposit come from? But if you need it to close, then there has to be a process we have to go through. But that is common for sure. People are like, well, I'm expecting this deposit from a family member. And it's like, okay, well, if you could do it right now without it and you don't want to go through the paperwork, then we need to wait.
Yes. So I think really quickly while we're on the topic, like what is considered seasoned funds where you wouldn't necessarily need to go back and track like a family member's deposit?
So we
or
say
something like that?
60 days because it's 2 statement cycles. However, 90 days is safe because whenever your statement cycle is, if you're aware of that for your bank and when your statement starts and ends, that's what we look at because we ask for 2 months of bank statements. So if it's on there right at the beginning of that bank statement because you just barely missed the cutoff, then we're probably going to have to wait till the next month if you don't want that to show or, And once we provide it and the underwriter sees it, they can't unsee it. So we just have to be really careful and make sure that we are aware of everything that's on there. So I would say, 90 days to be super safe because we look at the last 2 months. But if you're aware of where everything is, then 60 days.
Cool.
Yeah.
Sweet. Well, guys, those are the 5 biggest mistakes we see people make when getting pre-approved for their loan. So hopefully it's helpful. If you have questions, you can reach out to Shelby. We can link her contact information and everything below, but she's great. We love her, and yeah,
I
we'll see you
love
guys
you
next
guys.
time.
Yeah, thank you.